Hi, and welcome to another edition of CMS Forex News. My name is Christina Robinson, and today is April 21st, 2008. UK's Rightmove House Price Index showed that the asking price for houses in April was only 1.3% higher than last year in April, the lowest annual price growth since July 2005. On the month, prices were down 0.1%. Inventories of unsold homes are building up and are staying in the market longer. On the bright side, this boosts first-time buyer affordability as well as creates a wider selection. The Bank of England officially announced that it will swap £50 billion of infected mortgage-backed securities for government bonds. The market has come to expect these periodic injections and bailouts and thus has become hungry for more extreme measures. The sterling was pressured after the Bank of England unveiled its credit relief plans. The continuing drop in house prices and the less than inspiring plan for a £50 billion asset swap pressured the sterling. Meanwhile, the ECB sounded off more hawkish statements regarding the rising energy costs and inflation. This divergence of focus between the two central banks paved way for a climb of nearly 150 pips in the euro-pound pair by 2 p.m. Eastern Time. The pound also plunged against the greenback after the announcement. By 2 p.m. Eastern Time, the pound-US dollar pair slipped 200 pips from the session high. Again, the pound weakened due to market jitters regarding the effectiveness of the central bank's credit relief plan. The euro paired all its losses against the greenback from last Friday and gained nearly 150 pips since this week's session opened. Hawkish statements from the ECB reinforce inflation as the main concern of the bank at the moment. The rally in the euro-US dollar pair stopped short of its all-time high and retreated to just below the 1.5900 level by 2 p.m. Eastern Time. Australia's first quarter inflation for producers rose higher than expected. The 1.9% quarterly increase was the largest since the series began. The annual figures also exceeded forecasts and registered 4.8%. Although an interest rate increase from its 12-year high of 7.25% is already unlikely, Sunday's inflation figures will make a rate cut harder to come by as well. The Aussie gained after the inflation report, and the Aussie-US dollar pair climbed 100 pips from Sunday's session open to 0.9440. By 2:20 p.m. Eastern Time, the pair had retracted slightly to 0.9410. Demand for Canadian securities from overseas as well as Canadians' appetite for foreign investments both rebounded. In the backdrop of slowing economic growth, investments due for the U.S. market have shifted to the less anemic Canadian market. The price for a barrel of crude oil has reached another record high of $117, boosting the Loonie. After the greenback threatened to break out of its overnight narrow trading with the Loonie, the U.S. dollar-Canadian dollar pair fell 80 pips. The Canadian dollar gained on the back of another oil price surge and the positive foreign securities purchases report, both occurring at around 8:30 a.m. Eastern Time. By the afternoon, however, the pair has returned virtually back to where it started at the week's open. Switzerland will kick off tomorrow's fundamental docket with trade balance. Then the Bank of England meets to decide on interest rates, with some anticipating a rate cut. The U.S. will release existing home sales, house price index, and Richmond Fed. And that completes today's Forex News. Join us again tomorrow right here at CMSFX.com.